Okay, good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be taking you guys through what you can expect in the markets this week. So, to start it off, we have a really busy earnings season. The earnings season so far has been a stellar period as we've seen the indices rallying on a lot of strong earnings. Just recently, we saw 3M reporting earnings, very strong earnings. They had an earnings beat, and we saw the share price reaching a 20-week high, the highest price it hasn't been in over 20 weeks. And that also enabled us to see a much higher Dow Jones crossing all the way up to 40,700 from below 40,000. That was a rally of about 700 points on that particular earnings release. Now, as we go through the rest of the week, we have quite a lot of earnings. We've seen some earnings coming out from companies like like 3M. We also saw United Health. A number of financials as well also were able to release earnings where we saw very strong rallies going. Now I'm going into the week that we have, and looking at the earnings that we have set for the week. We have a number of companies releasing earnings. The big tech scheduled to release earnings. We have Microsoft releasing earnings uh, after the bell, rather after the closing bell. That is tomorrow, Tuesday, 30th July 2024. And of course, we're expecting them to indicate that they beat on the expectation of 64.3 billion. We're also expecting to see what their trajectory is going into Q3. And of course, traders will also be looking to see if they hint on any AI products and also any new things that could potentially spark growth for the stock. Now, going later as well into the week, we also have Meta Platforms, which is also among the big tech. It's also releasing earnings after the closing bell on Wednesday, 31st of July. And also on this same day, guys, we also have the FOMC that evening as well. We have the FOMC. And we also have Apple releasing earnings the day after that. We have Apple and Amazon releasing earnings. So as you can see, it's a really, I would say, very packed week that needs very careful approach, and of course a very organized manner of approach as you're going into the week, so that you maximize it, but also you do not find yourself in a situation where the volatility affects your profitability. Now, that's it really on the earnings. Now, aside from the tech earnings, we also have a number of big companies releasing earnings like Cigna, which is, of course, a big force in insurance. We also have a number of other companies like Kraft Heinz also releasing earnings. We have MetLife, we have the MasterCard releasing earnings. T-Mobile is also releasing earnings on Wednesday. Boeing will also be releasing earnings on Wednesday. And of course, if you look at the Boeing, the EPS that was there before, we had a negative EPS of $1.69. We're expecting them to report negative earnings of negative EPS for negative 1.6. We're also expecting them to have a beat on revenue of 17.3 billion. Maybe to speak briefly about Boeing, I'm sure most of you are aware that Boeing was having some challenges with regulators, and of course that has affected the stock's performance. But also aside from that, we have also seen that their deliveries have reduced for their planes, on the fact that they're having regulatory concerns, and of course they have also been having some troubles generally with customers regarding the safety of some of their planes. Now, that's what we really have to say on the earnings. We have AMD. I had forgotten AMD. AMD will also be releasing earnings on Tuesday. So we have a number of big tech companies releasing. We have Microsoft, Apple, Amazon, AMD, Meta, all releasing earnings this week. Now, today, before the bell, opening bell for the US session or for the NY session, we also have McDonald's releasing earnings, and McDonald's, we're expecting them to have a beat on revenue, 6.62 billion. And of course, we also expect them to have a beat on EPS of $3.07, $3.07. Now, crossing over to the economic calendar, Economic calendar is also looking relatively packed with a lot of data expected to be released this week. And of course, the major focus for traders, of course, the major focus for most of you is, of course, looking at what we can expect Jerome Powell to guide on. And of course, what we are relatively certain of is that we can expect a rate cut to come in September. But the markets have also been pricing in a potential the markets have also been pricing in a potential surprise rate cut in this month of July. And of course, this is because we are seeing inflation coming down quite nicely. And of course, the PCE data that we got also indicated that there was a bit of slowdown in household expenditure or personal expenditure by the households, indicating that, the inflation is properly retrenched, so it has been controlled in liking to the Fed. Though it's still above the 2% longer term target, just slightly above that target, which again Powell mentioned very recently in some of his remarks that the Fed does not expect inflation to reach exactly the target, but they need to just keep it close to the target. And I think looking at the data that we have been seeing, I would say all is well for the Fed to certainly start cutting rates. Now, looking into Monday, we don't have that much of data. Maybe we have some money supply numbers coming out here, of course, which don't really have that much of an impact on the markets. As you can see, the impact is only showing really one star, meaning that we will not see that much of a movement. Looking into trading so far today, we've been seeing a number of movements on some things. Like the DAX, we've been seeing the DAX having a steady move to the upside. We've also seen gold having a sharp buy. That's following gold's buy from Friday last week on the lower PCE numbers. I believe gold is looking relatively bullish again on those numbers. We are seeing a bit of weakness though on some currencies like the euro, and we hope to see how the day evolves. Now, going into Tuesday is also looking relatively quiet, maybe aside from the German GDP data that we have coming out at 11 a.m. The German GDP, as we saw previously, we had a negative reading, as you can see, of negative 0.2%, indicating that there was a bit of a slowdown there for that particular quarter, Q1. And for Q2, markets will be looking towards a positive reading. If we get a positive reading there, I suspect that will allow us to see a move higher for the euro, and of course indicate to us that the eurozone, and of course the biggest economy in the eurozone, is having a better economic conditions. Now, we also have a number of others that's going to be important for traders, like the North Rhine-Westphalia CPI. We have the Saxony CPI as well as also the Brandenburg CPI. So all these CPIs, again, keep in mind they are preliminary numbers. The same thing as well also for the GDP numbers. So we expect that these numbers will likely be revised, and we have to wait to see how that affects the markets. Now, also on Tuesday, we have the consumer confidence and the job openings data coming out. So it's a really, really packed week if you look at it, guys. So the consumer confidence, we'll be looking to see a reading above 100. If the number comes in slightly lower, I don't think there will be that much of a reaction in the market, as a lot of data sets are providing the market strong indication of resilience of the US economy, and possibly also why the Fed might delay to really cut rates, because they don't see any rush or any need for them to cut quickly. Now, looking at Wednesday in the Asia session, we have some data coming out from the Australia. We have the Australia CPI. It's going to be coming out for Q2. That's going to be at 4:30. Then, of course, we also have the retail sales data. That's also going to be released at 4:30. We expect that data to come in slightly lower, and we should see how that affects the dollar, the Australia dollar. If it comes in slightly lower, then I believe we are going to see some bearishness for the Australia dollar. If it comes in above 1%, possibly towards 2%, that definitely should be bullish for the Australia dollar. Now, we also have some data coming out from China, which is the manufacturing and services PMI. If this PMI is coming above 50, that means that there's a strong indication of expansion of the economy and one of those particular sectors, and it could be a good sign generally for the global indices and for the Chinese yuan. Now, on Wednesday, this is yes, Wednesday morning. Now, on Wednesday morning, we have the Bank of Japan, and then on Wednesday evening, we have the FOMC. So it's quite, I would say the busiest day this week is going to be Wednesday, since we have two central banks meeting, and of course a lot of things likely to be impacted. So if you know that you're trading on Wednesday, your focus is going to have to be on a JPY pairs, especially if you're trading in the morning hours, because whatever comes out from this Bank of Japan conference is going to affect the markets. Now, I know that by the time we have the snapshot on Wednesday, the Bank of Japan most likely will be through with their conference, which of course is at 9:30. So the main focus for this, as traders, for Wednesday, your focus is to look at the outlook report to see what does the Bank of Japan think of the recent statistics that have been coming out for the economy, but also uh, where do they expect to go in terms of policy regarding the rate cuts, the rate hikes. If we get signs or indications that they want to move closer towards hiking rates, again, if we also get a surprise rate hike on Wednesday from the Bank of Japan, I believe that is going to send the yen sharply stronger. And of course, we should see some selling coming in for assets like USD JPY, GBP JPY, and of course, CAD JPY. However, if we get a dovish tone from the Bank of Japan, if they indicate that they still need to hold rates as they wait for inflation to increase and things like this, all that then will allow the USD JPY to rally. We'll most probably see a rally on GBP JPY. We'll definitely, of course, see a rally on CAD JPY. So keep in mind, when you're trading the Bank of Japan release, there are ways in which you need to approach it. You first start by getting the monetary policy statement. The monetary policy statement, we shall go over it on Wednesday to see what it is in that monetary policy statement that can impact the yen. And then right after that, we then get at 6 a.m. the interest rate decision. Usually, the interest rate decision is what usually moves the markets. Whenever the interest rate decision indicates a rate hike, then it normally means that we can expect the yen to buy. However, if we see them holding the rate at 0.1%, then I think the yen will sell and we shall see a spike coming in for USD JPY and possibly a spike coming in for CAD JPY and GBP JPY. Awesome. Now, going into Wednesday evening, we have the FOMC. So for the FOMC, keep in mind that this meeting is in the month of July. 31st July is going to be Wednesday. The next meeting we have from the FOMC is going to be in September. So they're going to be meeting in September, and that is when the markets are anticipating for them to actually cut the rate. Now, in the July meeting, the focus will be first of all on what they think of the recent economic data. So it will be important as traders for us to review the economic projections. They are not yet appearing here, but when they appear, then I believe we shall go over those. The other one also that's going to be important is for us to see what they what any indications on where policy is going to go regarding the rate cuts. If they indicate to us the timing, we need some indications on the timing. We also need to see the dot plots to see what the 19 FOMC members think, and in terms of where they expect the target range of the federal funds rate to move to. So we shall be looking for some of those things from that. Now, regarding the FOMC conference, we shall majorly focus on comments from, rather questions from the journalists to see what the journalists think, and of course to see if they can get more comments from Powell regarding policy and where they can expect the rates to go. Now, we shall also be looking more into this on Wednesday to see the potential movements on the market. Now, for Thursday, we have the Bank of England. Bank of England will be meeting and they will be meeting at exactly 2 p.m. Then they will finalize that with a conference. The conference, I believe, is going to be sometime. Let me see. I'm just looking for the conference time. Let's see. Okay, the conference is going to be at 4:15, right? Yeah. So for the Bank of England, if you look at the BOE MPC vote cut, the last time they met, we had 4 members voting for a cut from two. Previously two. Oh, sorry. Previously two. Now they're expecting the members that are voting for a cut to increase from 2 to 6. Okay. Now, in terms of rate hikes, we don't have any member looking or voting for or is expected to vote for a hike. This is, of course, is because most of the sentiment is geared towards a potential cut. Uh, Governor Bailey has also emphasized that they have to be looking into cuts soon. They haven't cut yet. They expected to cut, as you can see. And of course, if we get the cut coming in, or if we get the cut delivered on Thursday, we can expect the pound to sell. So if you're trading pairs like GPP card, if you're trading pairs like GBP JPY, expect there to be some weakness if the Bank of England surprises us with a rate cut. And as you can see, uh, the previous here is 5.25%. The market is anticipating a 0.25% cut or 25 basis point cut from the Bank of England on Thursday. Now, also going into Thursday, we have some ISM numbers coming out for manufacturing. We'll be looking also for the S&P Global US Manufacturing PMI, where they're expecting it to decline. But again, with that GDP number that we got last week, I believe signs are showing towards a very strong US economy, and we should see that reflect even with the US indices. We should see them staying relatively stronger to the upside. Now, on Friday, we have the NFP. We shall get a deep dive on the NFP on Friday. But for the NFP, again, the markets are also going to have some really good movements over there. And markets are currently pricing in a potential sharp drop on the NFP numbers from 206K to 177K. So our eyes will be on this number on Friday to see what happens there. If the number comes in lower, I believe we are going to see a sharp sell on the dollar. And of course, if the number comes in higher, I guess then we should see a relatively strong move to the upside there for this particular for the dollar. Awesome. So that really sums up the week on the calendar. So we can just maybe go through a few headlines here to see what is currently moving the markets and what is currently, affecting the market. So when you come to check market screener here, market screener is telling us we have a number of things here. Generally, sentiment is pushing towards a dovish pause by the Fed, and of course, that's why we are having some rallying for risk-on assets. We're seeing some rallying coming in for things like the Dow Jones, the Nasdaq, recovering very nicely from the lows last week. We are also seeing some buying momentum there for things like the pound. Gold also was up for a nice buy this morning, but it has retraced a bit. But generally, sentiment is really looking risk on at the moment. And of course, we are seeing how that is affecting a lot of things. Now, of course, in headlines also, we had the Bitcoin conference over the weekend, and we are seeing how that is really affecting a lot of, cryptos. Again, for those of you that might not be aware, you can actually trade cryptos on FX Pesa. The margin required for trading a lot of these cryptos is really, really limited, from as little as $1 for opening up a trade as big as 0.01. So it's actually quite it's cost efficient trading cryptos on FX Pesa's Premier and standard accounts. And for those of you that do not have accounts, you can open up accounts really from the description there in the bio for you to open up accounts and trade these cryptos. Yeah, so generally these are the headlines we have. We don't have really that much news in the markets as of today. Maybe, of course, the major focus for this week, again, like I've mentioned, we're expecting the Bank of Japan, and of course, we're also expecting the Federal Reserve. So Asia shares rebound, hoping for dovish Fed guidance. Again, we have indicated this already. We're expecting that the Federal Reserve is going to give us a dovish pause on their rate. And of course, if they do surprise us with a rate cut, then that will also be a strong, good thing for the markets, where we shall see a lot of things rallying. Now, looking at the CME FedWatch tool, this is what we currently have. The next FOMC meeting is beginning in 2 days, and of course, this is what the rate that tool is showing us. Okay, so at the moment, we have a 6.2% chance of an ease at the moment, looking at the July meeting, the one we are going into. And there's a 93.8% chance that the federal funds rate remains between 5.25 to 5.5. But going into the meeting for September, for those of you that might not be aware, the meeting for September, we started at 74%. That was before the CPI reading. And at the moment, we have a 87.2% chance of a rate cut to be delivered. And as you can see, the probabilities up here showing a 100% probability of unease. And I think now if you click every other meeting, you see the percentage does not go below 100%. So the probabilities on this tool are showing that after September, the Fed is going to be cutting after cutting after cutting. We're not going to see any rate hike coming in from then. So September is where we're expecting the rate cuts to commence. If we do get, however, a rate cut in July or in on Wednesday's meeting, I believe that's also going to surprise the market, and we should see how that plays out. Right. Now, I'm quickly going over to Apple. Apple has been performing relatively strongly, and of course, the reason why we've been seeing a relatively strong price for this particular stock has been the recent comments on them on them introducing the Apple Intelligence, and of course, I believe that's one of the drivers for this. Now, Apple also tends to be the maker or breaker for the markets when it comes to earnings. And since it's releasing its earnings sometime on Thursday, I believe after the closing bell, the markets are going to have a very, very good reaction from here. So looking at where the Nasdaq is at, Nasdaq is right now stayed at around 19,112. That's the cash CFD for the Nasdaq. Cash CFD for the Nasdaq is at 19,110, right? So if we get a strong report from Apple, I believe we should see the Apple price possibly coming and recovering this level of 240. And of course, we could also see the Nasdaq trading towards 20,000. So I would tend to have a bullish outlook towards the Nasdaq and also towards Apple. It's really rare that this company tends to report these small earnings. It's usually on the side for the guidance, where we see the guidance sometimes is lukewarm, but we should expect Apple to have strong forward guidance going into Q3, and you should see that recovery to come out strongly for that particular stock. Now, before we cross over to the MT5 to look at the charts, I just want to quickly look at the DXY. So when you go on the daily, this is the DXY on the daily. The DXY seemed to have had, it should have, I think it had its stops. It topped for the year. I believe its top for the year is in. The highest that we had was this level here of 106.5. That was in April. And soon after topping this level, we saw that the markets actually retraced very nicely towards this support level, where the market, this is actually a 6-month support. We touched this level here of demand around 103, bounced off that level nicely, came back to it again in June, bounced off that level very nicely. We even have a double bottom there on the H4. And then we also reattempted the level again here. But as you can see, previously that level had held, but then it broke we had almost like a fake out or a liquidity sweep below that level, and soon after we fell below it, we immediately went back above it. So I would say, despite this failure to hold this zone, this still counts as a support level for the DXY, and I'm waiting to see how the market, how the DXY does this week. Now, I believe that if we get a dovish pause from the Fed, the market may not react so much to FOMC's meeting on Wednesday, especially since the anticipation is that they are going to cut in September. So that is very likely. However, it will be the comments that Jerome Powell makes that decide where the market goes, because sometimes his comments are really the same comments we've been getting from meeting after meeting. But if this particular meeting has new comments or new guidance, then I believe the market will then give us a new direction for the movement. Now, aside from the FOMC, we also have the NFP. So if the NFP number comes out bullish for the dollar or higher than the forecast, then we should see a reattempt at this high that will then create now a potential lower high that becomes the last high we get before the DXY starts selling into September. So that's what I think for the DXY, and how we can expect the market to move going into the week. All right, so let's cross over to the MT5 and see what we have on the charts. We are going to start with BTC USD, and then we can cross over to other things. So now going over to the MT5, so for BTC USD is currently flirting around $70,000 a coin. And I'm expecting that if we get a break above 70,000, then we can have a move higher. So as you can see, my analysis on BTC has not changed. Again, guys, BTC USD is available. The best spreads for trading it are available on FXpesa's Premier account. For those of you that would like to get into this coin, you can access it on FXpesa's Premier and possibly trade it on there. So as you can see, we were in this Davos box for over 3 months. We got to the bottom of the box. That was when we reached our low levels around 52,000, 53,000. Got back into that box and now bought towards the end of the box. So I'm still expecting us to have a very nice move to the upside. Possibly, we should very soon reclaim the 70,000 level. If we stay above 70,000, then the next move will be towards 100,000. Now going towards Dow Jones is looking like this at the moment. We had a very, very nice sell. The last time we met, I believe I indicated to you that this liquidity sweep here was a very, very nice sign for us to have a sell. So you can see we had a very nice sell there. Again, on Wednesday, we expected the sell to increase, and now we are seeing how that sell is playing out very nicely for the Dow. So looking at where the Dow is at the moment, this big candle which we had on Friday was as a result of the 3M earnings. 3M released very, very strong earnings. It was up about 20%, about I think 11% pre-market. Then it added another almost 9% after the bell. And of course, that really, really pushed the Dow Jones back higher. Now, looking at today, we have McDonald's, which of course is a food. They did in fast-moving goods, which is a food takeaway, and of course casual dining. So as you can see here, we have this is where the Dow Jones is seated. So with the McDonald's earnings around the corner, I believe if the earnings come out bullish, then we should see the Dow Jones possibly breaking out of that channel that it's in. It's a very, very small pattern that's forming there, almost like I would say a descending wedge. And of course, with some signs of liquidity sweeps or liquidity grabs back to the upside. So if we manage to break that movement there, then we should see a move towards this level here. I would stay relatively bullish on the Dow Jones, especially in this week, knowing that the Fed is going to be dovish. I believe also that the NFP numbers might not really affect the indices too much. If we get very strong earnings from Apple also, we should then see the Dow Jones possibly moving to the upside. Now, going over to the Nasdaq, again, guys, the Nasdaq, I hope you guys were able to get very nice trades on the Nasdaq. We gave very nice sales That was from from the previous snapshots. We had a very, very nice sell on the Nasdaq all the way from this level, taking us all the way back to this demand zone. So currently the Nasdaq is seated in this demand zone that I've drawn, and I'm waiting to see how it plays out around here. So if you look at the candlesticks that are at this demand zone, you can see that there's some hesitation for the Nasdaq to sell below 18,900. And of course, this is the reason why the market is having higher highs, and we are seeing that choppy movement to the upside. Now, I'm expecting the Nasdaq to have its temporary bottom on the lower time frames along this level. I don't expect the Nasdaq to sell below this zone. Since we're also down quite a bit from our high that we had around the 15th of July, I believe that is going to allow the Nasdaq to recover. And if you're looking for if you're looking for good swing trades, this would be a good one, since we have some kind of an ascending pattern here that will then allow us to break out of this price action very nicely, taking us back to this level around here. Now, going over to gold. Gold Gold has been on a very, very nice downtrend. Uh, I had added my Fibonacci retracements from this high that we had. So we had gold buying all the way to this zone, okay? And soon after we bought all the way here, we then saw gold having its swing top around this level and then starting a very nice sell. Now, I've added my Fibonacci retracement at this level, and then I've added the bottom of it right at this level here where gold bought off from. That was at 2,353. So at the moment, gold is looking relatively bullish, okay? And I'm expecting that if we manage to hold this demand that we have around this level of 2,353, gold could possibly keep buying. But there seems to be some hesitation for gold, especially along that level of 2,400. Okay. Yes, this is a demand zone that I marked. And of course, it was a reliable demand zone because once we saw gold selling into this demand zone last week, I believe around Tuesday, it bought off from that level and it was able to reach this level of 2,400. But as you can see, on the Fib retracement, we were unable to hold price action above that level of 2,436. So soon after gold reached there, it immediately retraced and started selling. Now, currently gold is in a discount zone on the 4-hour time frame, and I'm waiting to see how it fares along this level here of 2,353. I believe if gold is going to really sell, it has to come back below that 200-day moving average, which of course is a technical sell sign. But also after that, we have to see gold coming and breaking this level here, where we have some liquidity sweeps. So the buyers are seated here, but these buyers that are within this area here that I've marked green are not really strong buyers. That's the reason why you're seeing how gold is hesitating to stay above 2,400. Okay, so if these buyers fail, then the next level of buyers are going to be at this area here. And of course, it's these buyers here that will keep gold above 2,350. If they fail, then of course now we shall then go back to this area here where I believe the real gold bulls are seated and where gold has somehow for several months failed to sell from. So for now, let's see how gold manages around those levels of 2,340, rather 2,400 and around 2,350. So if you're trading today, my thinking would be for you to have buy stops at 2,400. If gold manages to, if the buyers there are strong enough to hold off sellers, then of course we shall see more buying towards that level of that 50% retracement level on the Fib of 2,417. If we hold that level nicely, then of course we shall go back to where we were around here of 2,430. But at the moment, we just have to wait and see. Price action is really, really limited today, so we just have to give it more waiting to see. Now, looking at GBPUSD, it's actually quite a surprise because I'm seeing GBPUSD with a really, really big bearish candle there on the H4 time frame that has taken it right now below that 200-day moving average over there that is on the 4-hour time frame. Now, GBPUSD, I think it's been a long time coming with a sell. Uh, it's been holding its price action very nicely along these levels here. We stayed quite bearish on it, but the bearish momentum was not really showing itself very strongly. And it's just now that I think GBPUSD is giving into that sell momentum. Now, um, if you look at where the uptrend began for GBPUSD, you can see that on the 1st of July, we started moving very strongly to the upside. And this is a move that ended on it ended with about, this was a 400 pip move that ended on the it ended, I think, on the 17th of July. Now it's at this point that the market now started retracing quite steadily. It's at first it was very strong bearish retracement, but then it started losing steam along these levels here. You can see how it started losing steam here, but you can see that we had lower highs, lower high after lower high. All those normally are signs that the bearish momentum is already in, and you should be looking towards selling. And of course, we then, of course, maintain price action below our 50-day moving average, which is also normally a sign of bearish momentum. Now, I don't know whether this is just pure price action or this is news that has caused that big candle right there that you guys are seeing. But I think, as you can see, we have now gone all the way below. We have gone into all these imbalance points on the H4 time frame. There's this imbalance we had from the CPI, and of course, we're looking towards selling into that imbalance given the hesitation to buy at these levels here. And of course, to the lower highs, this is clearly bearish momentum. Now, looking at where this buy began from, I believe if you're looking towards trading on GBPUSD, you still have a good chance for you to get some sales. And of course, it's not too sold for you to get in. If you're swing trading it, this level here is also a good level for you to sell, and you should be looking towards selling towards this zone of 1.27. And of course, I believe the lower high or the point for attack for a reversal of this sell is going to appear somewhere along these levels here. I'm not expecting it to be down here where we were on 1st July. It's most likely going to appear along these levels here. That's why we should see the buyers holding off sellers around here, somewhere around here. But for now, uh, this pair is looking bearish, and we're going to see more selling coming in possibly into the week. Now, USD CAD, again, USD CAD is looking very bullish. USD CAD, we saw some very nice trades on it. Again, this was after we had the cut that came from the Bank of Canada. The Bank of Canada cut interest rates. Of course, it was expected. You can go back to that snapshot. It was, I think, sometime last week where I indicated that we should be looking for buys on USD CAD. The buys were delivered, I believe, very well. And you can see, actually, it was a very nice move to the upside after the cut from the Bank of Canada. Now, the reason why we are seeing some bullish momentum there is because generally, the dollar is looking relatively strong. I do not know really why, because we're expecting the Fed to have a dovish pause, but it could be maybe markets are pricing, or the markets are resetting themselves for the FOMC move. So we should see some selling coming in there for pound dollar, possibly even some selling for euro dollar. And for USD CAD, the reason why we are seeing buying is really on the back of the rate cut. It's a fundamental move, okay? And you can see the kind of price action we had from last week. This was a very nice price action move to the upside. No-brainer buy, I think, on this particular pair. You had a golden cross appearing here. A golden cross, again, that usually is a very reliable sign of an uptrend. It appeared right here. And from that golden cross, you can see USD CAD is actually up about 170 pips, a movement of about 1.2%. Now, looking at where USD CAD could possibly go, if you are a trader looking for trades on this particular asset, there are still potential moves for you to get to. As you can see, the high that we had was created sometime last year. This was around 1.38900, and that's about 56 pips from where the price is currently trading at. So you might want to get some buys, possibly after retracements. on this USD card, possibly to the upside. Now, Euro USD, again, Euro USD had a very nice setup. I drew this just today. This was a very, very nice setup for us to sell. We are seeing some bit of heavy selling momentum, sharp heavy selling momentum coming in today during the Euro session, London session, which is affecting the Euro dollar and the pound dollar. Okay, so you can see that this wedge here is a rising wedge. Typically forms during uptrend markets, and it's usually a reversal pattern. So you can see we had a sell below that wedge very nicely. We are still above our 200-day moving average, which again, once we drop below it, that's when now the sellers are going to take charge of this pair, and we'll see more selling coming back towards this level here of 1.08029. And of course, just for you guys to also take note, if you're looking at the swing trades on the euro dollar, we started down here at 1.06, a move that took us all the way up to here that ended on the 17th of July. That was a move of about 260 pips, about 2.4%. And it's at that point that now the reversal began, and we're now seeing that selling momentum coming in. So I'd be looking bearish on the euro. Don't fight the price action. You can really see that the sellers are taking full charge of this market at the moment. And since we have a rising wedge that has been broken on the H4, that is our indication for us to look towards sales, towards those levels. Now, USD JPY again is really hesitant at those levels there. We're looking towards some buys at those levels around, some buys at those levels around the demand zones on the H4 time frame. It held this price action very nicely at 1.52. You can also see the kind of candlesticks. If you're a candlestick trader, you can see that the candlesticks here are indicating towards a bullish momentum. So we had liquidity grabs back to the upside, bouncing off that previous demand zone that we had on the 2nd of May. And of course, this gave us certainty that USD/JPY might not sell below this zone. And as you can see, it's actually not selling below this zone. Despite the very heavy bearish momentum on this pair, it did not sell below this zone, giving us that confidence that I think, the temporary low is in for us to look for buys. Now, the other thing, of course, when you're looking at USD/JPY, you can also notice here that you have a higher low, okay, on the USD/JPY, a very, very simple but sure indication to you that the pair wants to possibly move to the upside. And I think if we are to go by just this, I think USD/JPY will have some hesitation selling below that zone. Now, I know that the Bank of Japan is meeting on Wednesday, and their meeting on Wednesday is also going to provide more confirmation, especially on the fundamentals where this pair could go. If we do not get a rate hike, then I think that will really provide us very strong confidence for us to look for buys on USD/JPY, possibly towards those levels of 156. And if you're looking for something with high reward on your trading, this would be the pair to go to, because you can see how far down we are from where we were last week on Monday. Last week on Monday was just, I think, let me just check here. That was the 22nd. Okay, so you can see from Monday we have sold all the way here. It's about 500 pips, and of that move of 500 pips, we have only recovered about 170 pips of that move. So we should be looking towards more movement to the upside. Demand zones can be broken. Take note. They are not too reliable. If we have demand zones broken, then of course that means that they are no longer demand zones. But as you can see, if they hold their ground and they don't get broken, then we can have them as reliable levels for us to get into trades. Awesome. So I think it's a question time now. We've gone over quite a number of pairs and quite a number of different assets. So for now, I believe we can now go over to questions and see what you guys are saying. Okay, so Malombe, how are you doing? I hope you're having an awesome time. Malombe, you're saying, why is the euro dollar bearish at the moment? So for the euro dollar, I'll look at it in terms of technicals. Now, in terms of technicals, I'll have to repeat myself. Like I said, when you're doing analysis, it's better for you to look for the swing points for you to be able to determine where the market is at on a particular swing. So for instance, like if you look at the euro dollar, the swing high or the uptrend for us to look for buys on a trend to the upside started from here and then it topped around here. Now, euro USD is currently in a downtrend swing that began on the 17th of July that had first shown signs of strong downside momentum, but then it hesitated along these levels here. But as you can see, even with our pattern, there we have a very nice rising wedge. This is strong sign of bullish momentum. Okay, so it's a technical move purely on euro dollar. There's no news that I've seen that is affecting this pair at the moment. I can just quickly go to my calendar and see. I haven't seen any news affecting this asset. There's no news actually. Yeah, so this is purely technical. Yeah, purely technical. So you can see how to approach it. And I hope that helps Malombe. All right. Any other question? Oops. Good morning, Patrick. Patrick, you're saying that GDP data released showed a very healthy US economy, which boosted US stocks. Suppose they give a clear indication of a rate cut in September, would that weaken the stocks? No, 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 no. They wouldn't. First of all, you need to understand that you have to first see what are the drivers for price action. The drivers for price action on the indices. I mean, if you look at if it were GDP, why is that the GDP sold the Dow Jones? Because the GDP number came out, Dow Jones sold, Nasdaq sold. What is affecting the stocks right now is earnings. Okay, earnings. Those are the fundamental things. The earnings, the performance of revenue of key metrics like revenue, the financial ratios. All those are what's affecting the stocks. Plus also guidance and comments on how the stocks are going to how the companies are going to perform in this quarter that we're in of Q3. That's what we are looking towards. So that's why you can see that if you go to, like, for instance, the Dow Jones was up purely on earnings on Friday. There was a company called 3M. 3M manufactures different things like machinery and also these masks. There are those masks that have 3M on them. I don't know if you guys have seen them before. They also make goggles for using in factories and all these things. So that particular company was up about 19% on Friday, and that stock alone is what pushed the index to the upside. Okay, awesome. That stock alone is what pushed the index to the upside. You can see the candle right there. So this move here was because of 3M. But not only that, generally on Friday, most of the stocks were in the green. So we saw that bullish momentum really showing signs again on the charts for that move to the upside. Awesome. If Microsoft, yes, Joseph, how are you doing? You're saying if Microsoft beat earnings and positive forward guidance, Nasdaq will start recovering. Yeah, I think where the Nasdaq is at the moment, if you look at your charts, the Nasdaq is at a key level for it to recover very nicely. I believe that big sale that we're all waiting for happened. It said on the 11th of July, and it has now sold. It sold about 9%. Okay, keep in mind we're in a bullish market, so the more we sell, the better it is for buyers because then they get bigger reward from those sales. So it means for the Nasdaq, I will be looking towards buys. Usually, Apple and Microsoft don't normally report disappointing earnings. So if the sale comes in, it's most likely going to be purely maybe price action, where the market will sell even regardless of the earnings. Plus, also maybe the sale might come because of the comments from Jerome Powell and also from what happens from NFP. But if I look at the chart, I'll be looking towards buys here at this level here where the Nasdaq is at between 18,900 and 19,000. I'm looking towards some buys in that zone that can allow us to recover. If we take out this demand zone, and I think a Nasdaq will try to create a lower high, rather a higher low above this low of May. Okay, but it's in an uptrend. It's important to know that we're in an uptrend on the indices. Joseph, you're saying, do you think Jensen and Zuckerberg's speeches bring some volatility later today? Yes, of course. Yeah, definitely they will, because they have a general weighting on how their individual companies perform. So definitely we shall see some reaction there from their comments. Okay, so there's a question here: elaborate dovish and hawkish. Yeah, so dovish comes from dove, and a dove is a gentle bird. As you know, a dove, it's a good bird, it's a gentle bird. So usually it's a good thing when we get dovish. Dovish is normally good for the market. It's usually a good thing, and we see usually a positive reaction from dovishness. So dovish comes from dove. Now hawkish comes from hawk, and you know hawks are those they are they are meat. They feed on meat. You know, those birds, the vultures, the eagles, you know, all those ones, the hawks also. So usually hawkish means it comes from hawk, and it's normally not good for the markets, because any hawkish comments normally cause a lot of selling. So that's how we usually use those terms. Then someone is asking on yeah, on now on bullish. We also have a new episode for bullish banter, which is going to be posted on FX Spacer's YouTube very soon. So I'm urging you guys to watch that new episode for the bullish banter. It will be available on the YouTube channel soon. Malombe, you're saying absolutely nothing fundamental that is driving the bearish move. What move is that? Maybe for you to elaborate. I don't know, because you're not linking the move to something. Is it a bearish move on? I don't know quite really. Is it on a euro dollar? Oh, okay, okay. It's a follow up to what you are saying earlier. Yeah, yes. That's why I said there's nothing on fundamentals. That's why I said you need to focus on your charts and to see. So, like I told you, first determine where the swing is. Currently, we're in a swing sell. That's why I told you guys we're in a swing sale on a euro dollar. From the 17th of July, the swing sale is active at the moment. But the pattern that I've drawn here is a rising wedge, which is typically a sign for us to look for a sell when the candles break below this trend line. I think you guys are seeing this trend line here. So we broke below the trend line, and now we are selling towards that 200-day moving average. So meanwhile, Euro USD is bearish, because you can see it has lower highs on the H4 time frame. So it's actually quite bearish at the moment. And then you should be looking for sales with just those indications that the market is providing. Awesome. Right. Thank you so much, everyone, for joining me for today's market snapshot. I wish you all happy trading. And of course, we will meet again later in the week for more analysis and markets. So cheers, guys, and happy trading.